Good morning, traders. It's 8:01 a.m. Chicago time on Tuesday, the 8th of March, 2016. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. First off, happy International Women's Day. Hats off to all the women out there uh, pioneering across all sectors of the market. As far as the what's driving us overnight, the market is showing nervousness due to China missing its trade surplus. China released the trade surplus numbers. Exports fell 25.4%, 25.4% from prior year. Also, the Japanese 30-year government bond pushed way higher today, causing yields to tumble 22 bips, 22 basis points. Um, Seems like a lot of money is moving into safety there. Oil is up, but also gold is up. Treasury futures are strong. 10 years are strong. Euro treasuries, the Bund specifically, is up. The Nikkei's down. The Hang Seng's down. Shanghai flat. The Japanese yen is slightly up. All of that combines to tell us that risk is off this morning. Eurozone equities, the DAX is flat. The FTSE slightly down, the CAC 40 slightly down, U.S. equities slightly down, and the U.S. dollar is flat. So overnight sentiment's mostly guarded. Market stance is risk off once again as it was yesterday. We did push up yesterday though as a result. Let's take a quick look at yesterday's plan. For accountability purposes, this is what I showed as hypo 2 yesterday. Hypo 1 is in this video, um, just a few dots back here. Hypo 1 was this. This was hypo 1. The expectation is it would push higher into about 1990, 91. Um, uh, Bounce around a little bit, and then I expected sellers to come in and push us to 77.50 as a continuation of the risk-off sentiment from the night before, and as a continuation of what we did on Friday, which was fairly strong topping action last Friday. But that didn't happen. Instead, Hypo 2 was the one that worked out, and this is what Hypo 2 looks like. A rotation down into the overnight low, which it could not get, but it did rotate down just a little bit, and it continued higher into the 1999. Next level up was right up here at 2009, which was a naked point of control, I think, from the 5th of January. That's what was expected yesterday, but generally Hypo 2 played out. That didn't that was harder to see in the morning. But we were unable to take out the overnight low. Once the market rotated all the way back through the mid and out of the value area of Friday, the expectation was for it to pull back to mid like it did here, and then for it to continue neutral and push down into 77.50. That's what was expected yesterday afternoon. It did not follow through, though. Again, a fairly difficult trade to read. But overall, look at this profile, almost a perfect, what we call Gaussian or normal distribution profile uh, on the session. Yesterday was completely balanced. It was an inside day, higher low, lower high, with the point of control being inside of the prior day's value area, which is this gray area here. And overall, the market just taking a sideways stance. And today, we are trading right here at 88.50 in value, in range. We have pushed the overnight low lower, with the overnight high also lower down to 2050, 2000 half. And overall, it looks like we're opening in range in value, which shows further balance. But the market, as I'd said, since Friday is showing topping action, is showing weakness, in my opinion, and is likely to rotate down to 77.50. Couldn't do it yesterday. I was absolutely wrong on that first hypothesis yesterday. In fact, I did a study on all the days so far and how these primary versus secondary hypotheses worked. And I'll publish that here shortly. It just needs to be organized, but it's kind of interesting how things worked out so far this year. But the expectation so far, just to keep this video short and sweet, let's take a sweep of what we have done so far. So here we are. Yesterday, we traded right inside of this zone here. This zone here, we're stuck in this LVN zone. The next cutoff point is 2006.50. We almost got there yesterday. That's where we topped out on Friday, 2006.50. If we get through the 2006.50, then the next key area, which is very, very prominent, is 2013. 2013 is this high volume node right here, and it's a composite high volume node as well. And then the big line in the sand is right there, this low volume node that's separating this massive balance zone that we've had for a long time last year. It separates that from the lower balance, and that price is 2028.50. If you recall this price from the rollover in December into March, that 2028.50 area, 2025 is huge. So that's that's what I believe we're heading to, except I believe that we are likely to pull back a little bit. The market is likely to advertise for lower prices to entice buyers to step in, to continue the move higher into ultimately this 25-28 area above. I want to remind you again that Thursday is rollover for U.S. equities. We're rolling to June 2016, or the M6 or M16 contract on Thursday morning. Thursday morning's Trader Bite will quote the next contract forward. And overall, we have a week after that, basically 6 trading days after Thursday, when we have quad witching Friday, at which point the expiration comes into play, and of course having the 99 2000 area be a key area that we're stuck in right now. You'll probably notice that there's a ton of volume that goes off in that area as folks hedge their delta between the ES and the options. So that's how things are shaping up overall. We're still battling this red profile, this big red profile, and we are stuck in this range here. The market is likely to turn over the next couple of days and push lower. That's my expectation. Again, this morning, the overall expectation given 2 balance days, I expect the market to open and be responsive towards the 96, 97 area, probably 95, 96 area, chop around and rotate lower. Notice that my hypo 1 is basically the same as yesterday's hypo 1. Hypo 2 is clearly the opposite. Open, push lower, chop around, potentially take out the overnight low, and then start to move up again. The target above is 2009. That would be the target right here, and above that we have a gap zone that we have to contend with above 2009. I would not short above 2009 all the way up to around 2014, 2015, that high volume node area. That's how things are shaping up right now. Again, as always, I want to just leave you with a word of wisdom real quick. It's really important to understand that there's the goal for you to see things happening over and over again, and to see these trader bites is the formation of habit. Talking about it isn't going to do it. Only doing it is likely to instill the habit, give you that cue, routine, and reward cycle that's described in Duhigg's book, The Power of Habit. But that's really what we're after as traders, is to develop strong habits that we follow on a day-to-day basis. So you and I can sit here and talk a lot about what we can do or what we should do and get all fired up and enthusiastic and everything else. And then as soon as the video stops, you essentially go back to doing your old thing. Talking about it, pepping it up, uh, you know, going over it, celebrating it is not enough. Um, you have to put your ideas into practice, and that's the hard part. That's the discipline part of trading, and you basically put them into practice day in, day out, and then eventually actions, those persistent actions become habits. So pick your habits carefully and then practice them on a day-to-day basis. And the goal is to follow the same exact routine every day as you see here on these Trader Bites for years now. I don't know, been doing them for probably 2.5 years. You can go back and look at the record on YouTube, and you see that the habit is the same, covering the same thing, repeating the same thing. I go into a moment of silence at 8:25 at least. I meditate pre coming into the office, but there's always a moment of silence that I remind our S5 traders in the chat room to take. Stop your prep at about 8:20 Central or 8:25, 9:20, 9:25. Then just turn off your speakers for a minute, sit, close your eyes, and just focus on your breathing and just let everything calm. From the place of calm, that's where power comes. That's where the big things happen. And so having the routine, being able to slow it down and be done with it in a timely fashion, and giving yourself at least a couple of minutes of quiet silence, eyes closed, focus inward on your breathing, on how you feel, and then open your eyes up. And then when the market opens, you'll find over time that you'll be objective. It is important to practice deliberately, and Malcolm Gladwell talked about the 10,000 hours, but you can spend 20,000 hours doing the same thing and it won't make a difference. What's important is you do it, then you go back and you correct it, and then you do it better, and then you go back and correct that, then you do it better and better and better. And that's what's called deliberate practice. And for you to have deliberate practice, you need to be able to identify what your goals are versus what you're doing. And the only way to do that, in my opinion, is to keep a strong journal or strong record of what's going on a day-to-day basis, with the intent to identify those areas that need improvement every day. If you're coming in with a good plan, you see your plan work out, yet you're not able to profit from it, then chances are you're looking at execution issues, you're looking at psychology, mindset type issues that are interfering with the trade, and there's no way to identify that unless you're objectively writing down what actually happened, and then in a moment of calm, usually on the weekends, in a moment of calm, going through the week and reading the record that you made, and you'll be shocked. In my experience, you'll be shocked at the revelations you'll have. If you really mean to do this as a professional, this is what it takes. It takes grit. It takes your absolute commitment, and your continued persistence on a day-to-day basis for incremental improvements, just one inch at a time. You conquer the land 1 inch at a time, day after day after day. Don't waste your time while you're here. Good luck, and I'll catch you tomorrow. Take care.